Hey, what's up, my friends? So in today's episode, it's all about breakout trading, baby. So what is breakout trading about? So let me explain. So breakout trading is a trading methodology, right, that seeks to buy when the price breaks out of a specific price structure. It could be a breakout of a swing high. It could be a breakout of resistance. It could be a breakout of a range. So as the price moves a certain amount in your favor, in your direction, that's where you enter the trade, and that's what breakout trading is all about. You're buying as the market is moving in your intended direction, compared to a pullback where you're buying as the market is moving against your intended direction. So a breakout is when you're buying when the market is moving in your intended direction. And the first thing that I want to talk about is how not to trade breakout. Okay, so here's how not to do it. So often, right, I see many traders, right, on social media where they post the charts and the chart is really bullish, right? Like, 5 green days in a row, boom, 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 right? 5 green candles in a row, the price breaks out of resistance and they buy because they're thinking to themselves, right?
Man, Rayner, look at that chart. It's so bullish, right? It's going to the moon, right? It's going to $1,000 price target. It's time to buy.
And they chase such breakouts. But the problem with this is, what's the problem with this? Two things, right? Number one, when you chase such breakouts, there's usually no logical place for you to set your stop loss. Okay, so this means you're going to set a stop loss at a random level where the market doesn't respect. And this brings us to problem number 2. When you chase the market, what's going to happen is that this is when the market is about to make a pullback or even a complete reversal. And if you set a nonsensical stop loss, as I mentioned earlier, you will likely get stopped out on a pullback or the reversal. So this is why I suggest, right, when you look at the charts, if it looks really bullish, if it looks like it's going up every single day, today it's more likely to go up again as well. If you're thinking along those lines, just hold your horses and tell yourself, right, don't chase such breakouts, because this is really trades that you want to avoid. So now you might be thinking, okay, Rayner, so how do I trade breakouts then? So one tip that I have for you is that if you want to trade breakouts, look for this specific thing, right? I call this look to trade breakouts with a build up. So let's talk, for example, market is in a range between these highs and these lows. The price has now approached the highs of the range. Okay, so if in the past, right, what happens is that if the price, has 5 big bullish candles come into resistance and break out, you know that such breakouts you want to avoid because, it has moved too fast and too soon. What you want to do instead is to watch the price approach resistance. And you don't want it to break out just yet. Instead, what you want it to do is to form a build-up, to form a tight consolidation. So imagine price is at resistance and it starts to consolidate very tightly for the next 10 candles. So, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles just at resistance, consolidating very tightly. So this is good, right? Because this to me is a sign of strength, because what it's telling you is that there are buyers willing to buy at these higher prices in front of resistance. And the fact that it didn't reverse down immediately from resistance tells you that, there's some buying pressure willing to hold up these higher prices. So what you want to do now is that if you notice a build-up that's being formed at resistance, now you can look to buy if the price breaks out of resistance. And your stop loss now, right, has a logical level. You can just set your stop loss below the low of the build-up. So if this, let's say this is the build-up, your stop loss can just go below this low over here. And that's a logical level for you to set a stop loss compared to, setting your stop loss below the low of the range, which is so much wider. Okay, so this is what you want to look for. Look for a build up before, or rather to trade a breakout with a build up. So the entry point is very simple. When the price breaks above resistance, you can go with a buy stop order, or you can look for a break and close above resistance and get long. Your stop loss is just, below the lows of the build up. Okay. And to give it some buffer, you can set your stop loss 1 ATR below the lows of the build up. So now the question is, let's say the market breaks out, you have a proper stop loss, where do you exit your winning trade? So in such market conditions, right, I like to trail my stop loss, because if the price breaks out of a range, there's a good chance that this could transform into a new uptrend, right? So I want to trail my stop loss, right, and to ride this new uptrend as much as possible. So a very simple technique that you can use is you can use a tool like the 50-period moving average. So as long as the price is above the 50-period moving average, you hold on into that position. When it breaks and closes below the 50-period moving average, then you exit the trade. So that's one way for you to capture trends, right, when the price just break out of a range. Okay, so that's pretty much it, right? And before I end today's session, I also want to share with you the pros and cons about breakout trading. So the pros is this: number one, it will guarantee, right, that you will catch every trend in the market out there because you're buying, right, as the market breaks out of a swing high, as it breaks out of resistance. So you can also apply this concept not just in range market, you can also apply this concept in trending market. Let's say the market is in a strong uptrend. It doesn't make, much of a pullback. So when it breaks out of the swing high, that's an opportunity for you to also, get on board the trade and to ride that uptrend. So the pros is that, you are almost guaranteed to catch most of the trends out there. The cons, right, the downside to this is that, when you trade breakouts, there is always the possibility of a false breakout. No matter how sexy, how good that trading setup looks like, there's always a possibility of a false breakout. And that is something that you must embrace. And when you're trading breakouts, you're no longer buying low and selling high. You're buying high and selling higher. So that's a mindset shift, right, that you have to embrace as well. Okay, so with that, let's do a quick recap. Number one, don't chase breakouts. If the price has, advanced 4, 5, 6 days in a row, big bullish candles, and it breaks out of resistance, those are trades that you want to avoid. Number two, trade breakouts with a build up. A build up is a tight consolidation, can be anywhere between 7, 8, 9, 10 days consolidation, and that's what we call a build up. Number three, when the price breaks out and you want to ride the new trend, you can use a trailing stop loss like the 50-day moving average to trail your stop loss and ride the new trend. And that's pretty much it, right? So with that said, I wish you good luck, good trading. I will talk to you soon.